All right, this is class number 4 of trading fundamentals. Okay. Last class, I gave you all some keys about how to start stacking the odds in your favor. Okay. It's all about doing what? Identifying your edge, or when you have an advantage in the market, and executing when your edge or your advantage shows up in the market. So today, this is something I talk about journaling as well. Journaling is the most important aspect of trading, something that if you do not do, I can guarantee that you will absolutely fail in trading. Okay. Journaling is literally tracking your journey. This piece of information tonight is short and sweet, but it is critical. And just by understanding what I'm going to be teaching in this class will tremendously increase your odds and give you an advantage in the market in which you can learn and execute on a daily basis. This is something that should be tracked every single day that you trade. You need to know what type of trading day was the prior day. Okay. What type of day was it? Day type, stacking the odds in your favor. While the market and its outcomes are outside of our control, the market is very consistent. The market can only move in 2 directions, up and down. This allows us to be able to classify its daily movement in 3 categories. Knowing the probabilities of how the day shapes up really allows us to stack the odds in our favor from the jump. The knowledge is a major key for hunters. Remember, what we're learning here is to become the hunters and not the hunted in the market. Understanding your day type is something that is, again, going to tremendously stack the odds in your favor when it comes to trading. Okay, so I encourage you to go watch this video over and over and over again, because this is a major, major key to learning how to become the hunter and not the hunted in the market. Day type 1. Okay, we have a narrow range trading day, a trend day, or a test and retest day. There's 3 day types: narrow range day, a trend day, or a test and retest day. Okay, these are the only 3 categories or classifications for a trading day. I can go back and look at any day in the market, right? And any and every day in the market will fit into one of these 3 categories. Okay, now let's talk about the test and retest day. The test and retest day, probably the most important, happens why? Okay, we find or define opening price in the market. Okay, the market makes an initial move in relation to opening price. So in this particular example, the market makes a move up after it's open. Okay, comes back down, and eventually the market does what? Trade on the other side of the open. Okay, trades on the other side of the open. So here's our opening price here. Okay, and this is my chart all the way until 4 p.m. At 9:30 a.m. Eastern Standard Time, this is when the index is open, right? 9:30 a.m., the market's initial move or its initial drive was to the upside. Okay, and eventually the market retraced and it closed on the opposite side of its initial trading direction. Okay, now why is this important? This day type is important because this day type occurs 70% of trading days. Okay, again, here we are talking in percentages again. Okay, it occurs 70% of trading days. So guess what? I know that 70% of trading days are going to be a test and retest day. By knowing what the market is going to do 70% of the time, if I just continue to be consistent, alone stacks the odds tremendously in my favor. Okay, this stacks the odds tremendously in my favor. I know 70% of the time that the market is going to reverse its initial trade direction. Okay, 70% of the time the market is going to do what? Reverse its initial trade direction. This is what we call the test and retest day. Now, the next day type is our narrow range trading day, okay? Again, we find opening price at 9:30 a.m. Eastern Standard Time, okay? And opening price is key because guess what? The market just doesn't open at a random price, okay? And also the opening price gives us what? It gives us what? A consistent point, right? It gives us a consistent point to reference in the market. Okay, this becomes a consistent reference point in our market. So we pay attention to how the market has reacted to what? Opening price. Opening price again is our constant in the market. Once the market opens at 9:30, that doesn't change. If we go back and we look at our day types or the beginning of our trading day, that 9:30 opening price is the 9:30 opening price. So again, this becomes our constant in the market that we lean upon, okay? Now, back to the narrow range trading day. We have our opening price here at 9:30. The market makes an initial drive up in this example. It then does what? Trade below the open, eventually trade back above the open, down below the open, back above the open, and eventually the market closes somewhere around where? Opening price, okay? Last class, we talked about candle formation. Guess what? This candle formation gives you a doji, okay? This candle formation gives you a doji. And in the upcoming classes, you're going to understand why this is important, right? But in the meantime, our narrow range trading day happens 15% of trading days, okay? 15% of trading days. 15% of the time, the market is going to make an initial move up or down, reverse its initial direction, reverse its second direction, and ultimately do what? Close somewhere around where it opened, okay? Ultimately closing somewhere around where it opened. This happens 15% of trading days. And last but not least, our trend day, right? Our trend day, right? It's the easiest to look at when we go back and we do our homework. Say, man, if I got in right at the open and I just rode it out until the close. But ultimately, our trend day is usually the toughest day to trade, especially for what? Our 95% of newbies and retail traders that consistently lose money. Now, what is a trend day? Trend day, we have opening price, again, our constant at 9:30 a.m. Eastern Standard Time when it comes to our indices. Our commodities, gold, crude oil opens at 9 a.m. Eastern Standard Time, okay? So we gather our opening price for our commodities at 9 o'clock a.m. Eastern Standard Time. We gather our opening price at 9:30 a.m. Eastern Standard Time for our indices, okay, and our stocks. Now with the trend day, the market in this example makes its initial drive up. It may come back to test opening price and eventually does what? Continues moving up and moving higher for the remainder of the day, okay? This is our trend day. The market never comes back and trades what? Against our initial direction, okay? This trading day also happens what? 15% of the time, okay? 15% of the time. Now, if you can understand, you probably already at this point can see how understanding how the market moves and the probabilities, again, because we're playing a game of probabilities, how putting these probabilities and these percentages can tremendously increase our edge and give us an advantage on our decision making. Trading teaches you how to think your way through the moment, okay? It teaches you how to think your way through the moment. Understanding that what? The market trades on both sides 85% of the time. 70% from our test and retest day, and another 15% on our narrow range trading day, okay? So if our opening price is our constant if we're just cognizant of our opening price, we know that 85% of trading days, the market is going to trade on both sides of the open, okay? So step number one is always find an opening price. 9:30 a.m. Eastern Standard Time for your indices, 9 o'clock a.m. Eastern Standard Time for your commodities, gold, crude oil, and the such, okay? Understanding this, again, understanding 85% of the time, the market is going to trade on both sides of the open gives me a huge and consistent edge in the market, okay? In order for there to be some type of consistency, there must be some type of constant, right? And our constant is what? Is opening price. And we use opening price and the market's relationship to opening price to give us a huge advantage in the market. Again, as a recap, three day trading types. We got a test and retest day that happens 70% of the time. We got a narrow range trading day that happens 15% of the time. And we have a trend day that transpires only 15% of the time. And most importantly, we know that the market is going to trade on both sides of the open 85% of trading days, okay? Again, this gives us an opportunity, gives us the education and the understanding that puts the odds tremendously in our favor and gives us limitless, countless opportunities to take advantage of trading in the market in high probability trading scenarios, okay? So make sure you tap in with us at 722.io. Make sure you go watch these videos over and over again. Follow us on Twitter at 722p, myself at Chris Cole I am, on Instagram at Dr.Chris Cole I am. Peace and blessings, and I'll see you all for Trading Fundamentals class number 5.
And that's tonight. Make sure you lock in 722.io. That's SEVEN22.io. Tap into all of the links that we will have below on the YouTube channel to tap into this project. Peace and blessings to everybody tonight.